Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, so hope people caught the wrap up yesterday. Look, here's the deal. Daily chart. Today is the first day where you really have potential to end the lower band ride. Okay, they came in enough yesterday to keep it going. That 200-day continues to hold. We're back inside the Bollinger Bands. In order for them to keep the band ride going, they're going to have to go sub 42.88. We're trading 43.56. So unless there's a piece of news out there that's literally going to rock this thing to its core, it's going to be a pretty tough situation to get that down, and that's fine. Bands expand, band rides end. It's what you do with it now that's going to be really important. So what do I mean by that? It was one of a couple of things. We talked in our subscriber webcast 3 or 4 days ago. This thing can pause. Then potentially what you see at times is it'll whip down into what we call a secondary band ride. Secondary band rides are total puke jobs. That's where you catch everybody leaning, everybody freaks out, and they drag the tape right back in the direction of the band ride. Usually happens with upper band rides. So the dynamic there is we're going up, band ride up and up and up and up and up. It takes a day off. Everybody gets all happy. Everybody gets all excited, starts throwing contracts at it to short it, and then they wake up the next morning and bam, they lift it, rip it, go grab that band, hold on for dear life. Everybody on Twitter gets really mad. And this goes on and on and on. It's really funny to watch, actually. That could totally happen here in the inverse. If it takes a full day off, people are going to start to put money to work on the long side. There's potential that it could whip down. Now, all that said, this is only something I want you to be aware of. It's a low probability outcome, okay? The reason I mentioned is this. If it plays out that way, you need to be short, not fighting it long. Secondary band rides tend to get fought by contrarians and everything else. People, like I said, people get all pissed off and emotional. The tweets start flying. This is parabolic. This is crap. I read this in Barron's. All the nonsense that people come up with. Market Watch said that. Just honestly stop. If the thing whips back down, you got to be there short. Okay? What is the higher probability outcome? The higher probability outcome is that they're going to slow bleed this back to the 9-day. They're going to slow bleed this back to the 100. If they don't get a big move to the upside today and they just kind of hold serve right here where they are, I'm not sure exactly where weekly pivot's going to be, but there's the potential that it's going to be below price. Which kind of lets the bulls off the hook, so to speak. They don't have to do a whole hell of a lot. So the rubber's going to meet the road when we get back to the 9-day and back to the 100-day. What's it going to do then? Is it going to hold and come in? Look, a test from here back to the 100-day that failed and took out 42.77 and de facto took out the 200. That's a bold, bearish statement, technically, by the market, especially going into October, November, December, where the thing doesn't tend to want to go down much. So what if they don't? And remember, I've talked and given webinars and stuff about trading plans, this, that, and the other thing. The thing you have to understand about trading plans is this. Having a trading plan is not walking into your day with a pad on your desk that says, the market will do this today. Okay, Gandalf. It's not the way it works. Having a trading plan is a set of either or propositions. So either we whip back down, do a secondary band ride, or we don't. Just like when we got down to the 200. Either it was going to convert it or it wasn't. We get up to the 100-day, either it's going to be resistance or it's not. And if it is, we're going to do this. And if not, we're going to do that. Constantly reacting. It's like branches on a tree. Just where's the next fork in the road? Where's the next branch? What's the next decision? So if they can't hold the 100, then you got 100-day support, you got 9-day support. Then you really got to get back to the core of the apple, so to speak, which is that daily mid-band up there. Okay? And that's where the market will decide, are we still sell rallies? Do we come up on top, or are we buy dips? Okay? So, look, how do any of these numbers affect the immediacy of what's going to happen at 9:30? They don't. They don't. They don't. That's where the trading comes in. That's where you trade what's in front of you. That's where you identify risk and you worry about the 10 handles in front of your face. And all these other handles that we talk about at night and all the different webcasts and all the stuff, that stays right, that just stays right over there. What that does for me, I was saying this to subscribers the other night. What these discussions impact for me as a trader, there are times when I will hold runners longer than I normally would, or let things work, or say we got to take this off because I'm looking at the next branch on the tree and we're coming to the fork and I want to lock it in. Or, it kind of looks like this. We can try this. If we're wrong, we're going to have to do this almost right away. That's how these discussions play. It shouldn't affect your immediate trading. This thing's either going to be making higher lows or lower highs coming into the day. You got to trade it accordingly. All right, so where's stuff at? VWAP 43.47, proprietary moving average 43.57. So 47 to 57. Look, they took it down to 43.50 at about 8 o'clock. It's up to 60. You've got income and spending at 8:30. You got wholesale inventories at 8:30. Trade balances at 8:30. So you got some stuff today. The looming, I love that word, the looming government shutdown. We do this like 4 times a year. Anyway, Globex high, 61.5. The bulls struggled with yesterday's Globex high, but we're sitting above all that right now. It'll be very interesting to see what moving averages we interact with. 2 seconds on the hourly chart, because I droned on about the daily chart, but this is a bigger picture view today. Consolidation. We talked more about this on the wrap up last night, which you guys should watch. It really pinched hard here. I mean, that was a real dip in the bands. They head faked them down a couple times here, and here. They spiked it up and they went. The key about all of this is this hourly mid held overnight. And now that's a higher high, right? Yeah, it is. So you start looking at the consolidation area from Tuesday, which is, call it 65 to 75. Then you got the highs from Tuesday where they dunked on it. That's up at 82. What do the bears have to do? For starters, you need to close below the hourly mid-band. And then you got to come back and deal with this roundy. You couldn't deal with it. Here. Come on, guys. You got to be trading 42s. You're better than that. And if you get back down there, that's got to go. Doesn't have to be today, but it's got to be the first part of next week. All right, this is a little bit of a long one, but I had a lot to say. Watch it a couple times if you need to. Everybody have a fantastic day. Trade them well. Have a great weekend. Come check us out on Circle. A lot of stuff going on over there. And it's a great place to really understand what we do and how we do it and see if we can help you, because I know we can. All right, have a good one. Talk to you. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.